my turn.
It's your turn.
Hi, Facebook!
Hello.
Hey, we're back. It's Stephanie Adams with SOS Solutions and Rob Younce with OVM Financial, because I'm going to introduce him. He can't talk today. He's not allowed. I'm kidding.
Oh, okay. Hold on. Sorry.
Hope you guys are doing good. What is this, second week? Is it the second week of January?
Second full week? Yeah, something like that. Yeah, something like that.
Okay.
Yeah, we've been here a while.
Are you sticking to your resolutions?
Of course. I don't make them.
I'm not.
I don't make them.
No, good.
I don't make them.
So you're absolutely
I
sticking
set
to
goals
them.
for the year and things I want to do, but I don't set resolutions.
Well, this was one of our goals for the year.
That's true.
We're going to do 52 videos this year.
52. Once a week.
Yeah.
I know. It's a lot.
Can we do one when we're drinking?
I don't know about that.
Oh, that might be against
We are
guidelines.
drinking, but it's water.
Yeah, I'm drinking water.
I like
See
your
this
cup.
Isn't it
Love
awesome?
it. Yes.
I'll get you one.
Thanks.
Yeah, my friends do this. This is Salty Sisters. Look, I did a spotlight.
Wow.
Salty Sisters.
So what are we talking about today?
All right, so I've said this quite a bit that we need to break down the loan officer lingo because
yeah.
I do credit. I don't know loans.
Right.
I know certain things about how to get qualified for a loan.
Yeah.
I don't know everything. So things tend to come out in like letters and not like the actual name. So we're gonna start with an FHA loan.
Okay.
Which stands for
Federal Housing Administration?
Federal Housing Administration. So this is a like government loan?
It is. It's a government-backed loan that was set up to promote home buyers, promote home ownership and things like that. So over the years it's evolved quite a bit, but it's really kind of gotten popular after the bubble popped and it was an easy way to get back into home ownership.
Okay.
So, and I know you and I had talked, and it a lot of people associate it with the first-time homebuyers program, but it's not. You don't necessarily have to.
Yeah, that's what I heard. Is
yeah.
This is the best one for first-time homebuyers, but I thought it was pretty cool when we talked. You said no, anybody can use this.
Yeah.
So let's do some questions here.
Okay.
Obviously I'm the credit lady, so my first question is credit.
Yes, you are the credit lady.
I am the credit lady.
So credit, the reason it's been so great in promoting home ownership is that the credit standards are a little bit more relaxed.
Okay.
So I know you and I have talked offline about how how lenders will get automated underwriting done. And what that does is it'll tell us the answer of whether or not this is a doable loan, and then it outlines how we need to document it. So when it goes to the underwriter, then they have the checklist, and they just need to make sure that everything's validated.
Everything lines up, right?
So
yeah.
with this, with the FHA, you can do credit scores all the way down to, again, in general, as lenders can do them down to 580. There are some that will go past that. There are compensating factors once you get down into the lower credit scores. However, from an automated standpoint, as we look at 620, so a lot different than, let's say, a conventional loan where the credit scores need to be higher. Even on a VA loan, kind of the sweet spot on those is a little bit higher. But on FHA loans, they do allow for a little bit more credit leniency there.
So all of the lenders that I talk to that say, hey, we can do this all the way down to a 580, this is normally what they're talking about.
Yeah, typically.
An FHA.
Yeah, and
Okay.
it's a low down payment, so that's great. We mentioned the first-time homebuyers. It doesn't need to be a first-time homebuyer program, but even with a 620 credit score in general, you can have only 3.5% down payment.
Okay, so you do have to do a down payment with
Yes.
it. So what about with the, I see a lot about grants and stuff. Does that all apply to FHA, or is that a different program?
So there
We'll talk
are
about later.
some of the first-time homebuyer grants in different communities that tie into an FHA loan. Actually working on one now for a lady where we're doing an FHA first mortgage. So technically she needs to have 3.5% down. However, the grant is allowing her to only have 1% down, and the grant is taking the other 2.5%.
That's awesome.
And covering closing costs.
But then it depends, like the grants are only available in certain areas, right?
Correct, and they have
you
their
have
own,
to buy within a certain area.
and they have their own credit criteria. So while the debt ratio on an FHA, the overall debt load relative to your income, while that needs to be, we've done them. And I know several people have some success stories, but just did one recently with up to a 54 on the debt ratio.
Okay. So what he means when he's saying the debt ratio is it's your debt to income ratio, like
Correct.
how much you bring in versus how
Take
much
your total
you pay out.
debts each month that you pay out in your monthly bills, divide that by your gross income, and that's your debt to income
DTI.
ratio.
So we hear that.
I try to stay away from DTI. So
sorry.
No, that's okay. Just because I don't want more acronyms out there. We do an
debt
awful
ratio.
Yeah, we do an awful job of that as lenders and
Hi,
people
Chris Davis.
in the mortgage business. Hi, Chris Davis. What's up? And hey, Bob. I just saw you on here too. But on this, when you bring in somebody who's doing basically a second mortgage, or a in that case, it's really kind of a silent second, meaning with most of these grants, they're not making payments on them, but they have length of home ownership requirements.
Okay.
So
maybe we need to do like a completely
yeah,
different video about
because
grants.
that one is limited to first-time home buyers.
Yeah.
It's limited income-wise and things like
My
that.
daughter got a grant for like 14 grants.
Yeah,
She got approved. For
That's
it.
a
It was awesome.
lady I'm working with now.
Buying
Is
in Portsmouth.
we paid all of her closing. We're paying all of her closing costs, and we're applying what's left into her down payment.
That's so
The
cool.
only requirement, she has to have 1% of her own funds involved. So
Okay, so credit score wise with the FHA, they're a little
620-ish
more
is really what they look for automated approval.
Okay.
Once we get outside of that automated approval, we have to have a lot of what we call compensating factors, just reasons why this loan works.
Okay, cool. Yeah, you and I just had a really, man, there is so much
There
that I
is.
don't know about loans. You guys have to go through a really rigorous course. There's so much information in there to absorb and pass these tests. It's crazy. I know credit.
Well, things change daily for us. I mean, we get emails all the time from underwriting saying, hey, we just got clarification on this, or hey, this regulation just changed, or this guideline just changed.
Right,
so
yeah.
it is changing all the time. We constantly have to take continuing education and stuff like that as well.
And I think it's because they're just trying to make sure that we don't end up in another housing bubble.
Absolutely, because
We want to make sure that people that do get the loans can actually afford the loans. We're not
Correct.
dropping them into something that later on they can't afford.
Correct, and it's interesting you say that, because, and we didn't talk about this offline, but
It's our chemist.
I know it is. But last fall there were a lot of loans, and even last summer there were a lot of FHA loans that were a lot higher debt ratios. 50. I mentioned the 54 that I did, the 54, 56 in that range, and what happened was the default rate started creeping up a little bit.
Ooh.
So they made a slight course adjustment and said, all right, you can't have debt ratios above this now.
That's good.
So
That's
it's
good.
really a way for them to prevent that from happening. And all the crazy loans that were offered during the bubble aren't there. The no income,
Right.
no asset verification, basically. Yeah, I know, it was awful.
Okay.
I wasn't in
I'm
the
not-
industry during that time,
I'm
so
not
I'm
gonna
happy.
get in trouble for defamation or something, but my mind says, what?
Yeah.
No income, no
Yeah,
credit.
it was
You
crazy.
get a house. We're all over
Yeah,
at
that's-
this point.
Yeah.
So FHA. So I have one last question. What happens if you default on an FHA loan? Because I hear there's a time limit before you can apply for another house.
Well, so there's different types of things. You have a short sale. You can give up the deed in lieu of a foreclosure. You can have a foreclosure. Each one of those are handled a little bit differently, but the general rule is 3 years outside of that. And the reason being is they want to make sure that's all settled. So there's again, like we were talking about earlier, there's a lot of moving parts to this.
Right.
So if you have a special scenario, a bankruptcy, a foreclosure, a deed in lieu, a short sale, anything like that, sit down and talk to a mortgage professional, because there always are extenuating circumstances. One thing people don't know is that you can, and it's a very, very small chance, but you can get a new FHA loan if you had a bankruptcy that has been discharged less than a year. You can actually, even while you're within that bankruptcy period.
Right, because the criteria normally across the board is it has to be a year removed, right?
2 years, actually.
Oh, wow.
For most.
Okay.
Yeah.
Okay.
So each loan program is
I
a
don't
little
know
bit
most.
different. So I'd say, if you have those scenarios, understand it's an exception and it's a case by case. It's
Right.
not, I've got a year, I've got maybe a good reason. It has to be approved really by a long line of people to make sure that it
And
works.
you got to get your ducks in a row.
Yeah, so
don't try to apply for a mortgage after a year and your credit score is a 520. That
Right.
You didn't learn anything.
Right. And that's really meant to control the default rate on the housing.
Yeah. So I love that. I didn't know that they were adjusting it based on the trending that they were seeing. I think that's really good to make sure that we don't end up in that situation again.
They have a lot of data.
It's damaging.
A lot of data. So using that in the right way to making sure that they're controlling, making sure there isn't a high default rate, really it benefits everybody.
That's good. All right, guys. So FHA loans, I really just want to break down these loans because there's a lot of different products that you guys offer. And there's really no way that we're going to be able to say, okay, this person is qualified for an FHA, but this person isn't. It's all based on, obviously your lender is going to determine which product, which program is going to be the best for you. But I wanted to give you kind of like a baseline of, here's what this one is, here's what it was created for, and I think we did that. Is there anything else you want to talk about?
No. If you have any questions, if you're just not sure or you want to discuss a scenario, very easy to get in touch with here at OVM Financial. It's Rob Younce. You can go to robyounce.com. Takes you right to my OVM lending page. You can call me, 757-286-8912. You can text me. Email at rob.y at OVM Financial, and if you're just not sure, you can call Stephanie. I think she can get you in touch with me.
Absolutely, I can get you in touch.
And you can help with the credit piece, right?
Heck yeah, I can. But I love that FHA is really for the people who are trying to recover from credit issues and still gives them the opportunity to, because once you get a mortgage, the world opens up.
The skies.
Everything's
clear,
secure at that point. But if you have questions about your credit, SOS Credit Solutions. Actually, I changed the name. It's SOS Solutions.
SOS Solutions.
And I'm Stephanie Adams, 757-356-5756, soscreditsolutions.com. Give me a call, and I will hook you up with Rob. If that's who you want to work with, yeah. And I'll walk you right into OVM if that's what we need to do to get it done. So, all right, guys, take care. We're going to be back next Wednesday.
Yeah.
Unless Rob's closing a loan and the sky has fallen. We should be back next Wednesday.
See you
and
Wednesday.
we don't know what we're talking about, so you'll have to tune in.
And if you have an idea or something you want, get to us in our DMs or comment down below. See a lot of people that are actually watching us that hopefully if you have a question, you can reach us at one of the numbers or, like I said, in our DMs or
I've been
below.
getting a lot of people that are like, hey, you talked to Rob, while you were talking to Rob, this happened, and we're answering questions. So, yeah, keep them coming, guys. We're not doing this for our health.
Yeah.
Are we?
Well, I don't know. I feel good.
I feel good, too.
All right. See you guys later.
Take care, guys.
Thanks so much.
Bye-bye.
I'm climbing across the table to turn this off now.